Everyone, welcome to this week's FogCutter Live. I'm Mike Curtis here with Preston, the Pirate James, founder of Traders Edge Network. We're going to kick off the week talking about the financial markets, hopefully help you cut through some of the noise and the fog out there. So, Preston, I know we want to talk about some earnings, the broad markets in general, just a little bit, what we've seen, how it's recovered from last week. We had that shortened week with the Martin Luther King holiday, and Tuesday was just kind of that really nasty sell-off day. We've just pretty much, recovered from all that along with a full slate of earnings. So
Well,
say hello. We got a lot on tap and we'll dive in.
yeah, Mike, and we have an FOMC decision this Wednesday during market hours. There's also new talks of a government shutdown that's
Right.
going on out there, but I really found interesting that January barometer data that you've been reading through.
Yeah, no, it's a good place to start. So if you're not familiar, there's a few indicators that historically have proven, how's the year going to do? How's the year going to do? Well, one of them is the January barometer. And what it simply means is how the S&P 500 performs in January is an indicator of how the rest of the year is going to go. So it's about an 84% accuracy when the S&P 500 is up in January. The rest of the year tends to perform where we have a positive growth year, and that's happened 84% of the time. So if you look at where the S&P closed for December 31st, just peeking at it real quick, it was around 68.45 was where we had the close of the S&P 500. And so if we can finish January, which would be this Friday, January 30th, that's the last trading day of the month, we'll have that January barometer check. And it just has to be higher by a point or two. It doesn't have to be a certain percentage up. It just has to show a positive gain for the month of January. And that checks the box for that January barometer. Again, 84% accuracy going back 75 plus years,
Wow,
where that shows some positive gains for the remainder of the year. So keep an eye on that for sure.
that's really compelling, Mike. That's really killer. And then and then this is a month, and the next several weeks are just chock full of earnings. Of course,
Right.
the two I'm most excited about this week, Mike, I've been waiting and waiting and waiting, is for Ethan Allen and Sally Beauty Supplies earnings announcements, which are this week.
There you go.
Big just kidding on that. They do announce, but Mike, we're chock full. We've got from defense names. I mean, the biggies this week: Tesla, Meta, Microsoft,
Mhm.
Apple, ServiceNow, and it's just interesting to note um, earnings that were super anticipated maybe 10, 15 years ago. Like IBM and Caterpillar. It's just with this whole AI build out, it's just interesting what ticker symbols people's eyes are on, these days compared to days past. But United Healthcare, uh, man, we're loaded. We're locked and loaded this week.
Yeah, definitely. When you have a lot of these Mag 7 stocks reporting, right, like you said, Microsoft, Meta, Tesla, Apple, right? We have 4 reporting in that 2-day span. Throw in Visa and MasterCard, huge, Starbucks, like you said. So there's so many of these companies this week with just a lot of magnitude. It can bring some volatility for sure, right?
Yeah.
Between those 4 Mag 7, we could look it up, but they're a pretty sizable percentage of the S&P 500, really impact the NASDAQ. So if one of those company misses or 2 of those companies miss an earnings report and the stock goes into a little sell-off mode, it can really have a rippling effect across the market. So mix
And
in as well. Oh yeah, go
I
ahead,
was going
P.
to say that Magnificent Seven, the Tesla, Apple, Amazon, we can Google, uh, close to 30% of the S&P 500. And just to add to your point, Mike, I just want to add this, that, earnings announcements, just for the our audience, is probably, everyone knows that's announced. That's up now. That's the earnings announcement is already in the past as they announce. That's past, but they use the pulpit of announcing earnings, and they announce guidance looking forward. So, these companies that are leading out in AI, and just with the leadership that they have, whatever Nvidia says looking forward is the biggest deal.
Right.
And Apple and Amazon and Tesla, what they see going forward. So we not only get the earnings, which is the immediate past, now we get their guidance. And so many, Mike, how many hundreds of companies are affected by what Nvidia or Amazon say going forward? We can't even calculate it. There's so many
Yeah.
ancillary companies waiting basically on the guidance of these big monsters.
Yeah, absolutely.
That's why it's a big deal.
Yeah, no, it's definitely true. So, you think about, you mentioned the FOMC announcement that comes out on Wednesday
Mhm.
during market hours, a little bit more towards the end of the trading day, right? They always put out the announcement, and then there's the conference, the press conference, where Jerome Powell's at the podium and taking some questions. And so, the initial statement causes some movement, and then his press conference can cause movement. So all of that happens, which is a pretty major market event. All of that happens within a couple hours of Microsoft, Meta,
Right.
Tesla, and Starbucks reporting earnings. So um, it that Wednesday into Thursday we're probably going to see some volatility. So no, that's around the corner. Be prepared for it. Um, and again, we don't love to trade over earnings because it can just be so unpredictable. They could have the best earnings report, just completely knock it out of the park, and then they can say, next quarter we just got to look at our earnings guidance and reassess things, and the stock can just crater. So there's
Right.
there's a lot of eyeballs on it, a lot of volume, a lot of volatility, and so you layer three Mag 7 stocks and an FOMC meeting on the same day, and we're probably going to see um, some volatility for sure.
Yeah, this isn't a normal week when that happens. That's so for sure. And like you said, to your point, Mike, just knowing about that to start the week is a big deal, because earnings announcements are fixed in stone, whether it's
Right.
before the open, after the close. Same with these economic reports. But Mike, can I share something that I'm probably more excited for than I have been in ever since weekly options were born in the spring of 2010?
Absolutely. Yeah. Share the good news.
It doesn't start this week, but starting the following week, and they have already printed up these dates. But and I give all credit to my friend in the 805, who I'm text friends with somebody, I don't even know their name. We've texted for years, and he's obviously a WoW insider, but he just somehow got through and got my cell phone, and he wishes me happy birthday and different things, and sometimes will correct me on an update or whatever. But I get it from the 805, Mike, that starting next week, the Mag 7 stocks will all start having 3 option expirations a week. And
Wild.
also added to that is the ETF that deals with Bitcoin, the IBTI, or
Mm.
is it IBIT?
IBIT. Yeah.
IBIT. IBIT will start having 3 expirations a week, and the
Wow.
Mag 7 will start having 3 expirations a week. And if like someone like next to you, like, oh, what's the big deal? Or maybe our audience is saying, what's the big deal about that? Well, so these numbers can get weird just talking about it, just via audio. But when options went from from forever from having monthly options, and not all stocks have weekly options. There's about 10% of stocks that have weeklies that have monthly. So the vast majority of options out there expire every month. The big deal with the weeklies is when we looked at the same strike price as a monthly, but we saw the 1 week price, and we're talking about being from a seller's perspective. We saw that if you sold weekly options instead of the 1 month, that 4 weeklies added up to double the 1 month premium. So by doing nothing else and just focusing on the weeklies, you were able to double your income versus before. And the reason why this is so exciting, of every 48 hours, basically a Monday expiration, a Wednesday expiration, and a Friday, is there'll be even higher premium. So if we sell every 2-day options versus the 1 week, we're probably going to be doubling our income as option seller. Mike, this is like such a big thing. I'm looking at obviously it really on all my accounts where I sell, because I have stocks and these names, lots of different names that I sell weeklies on. I'm looking to move some of those into the Mag 7s because this is such a big deal as an
Right.
option seller. I don't know that I can do it justice. I know you're a little, Mike was the quarterback. I was the linebacker. Look, Mike's vocabulary is a little bit better than mine. He's a little more reserved. I got the messier office. He's got the clean office. Come in and save me, Mike. What does this mean to you?
Yeah, no, the simple way to say it is it's more income potential, right?
Yes.
So that's the simple version of it. Because these options hold a lot of value right before they expire, right? Instead of selling an option Friday to Friday, which is what we've been doing for since 2010, using these weekly options, now we can, if you want to, you don't have to, but it just more income potential to sell twice a week or 3 times a week. And we've seen it on the S&P index. They have 0 DTE, so
Right.
0 days until expiration options. They have options that are expiring every single day, and the volume on those are just crazy. So every time they introduce a shorter expiration period, people just really flood to those. So we saw it, like Preston, you've been trading the Monday, Wednesday, Friday expiration in SLV off and on for several months now. So you've seen that really play out. So simply what it means is, instead of selling Friday to Friday, if we can sell Friday to Monday, Monday to Wednesday, Wednesday to Friday, we're getting that really rapid time decay working in our favor the last day or two of that option's life, and it just means more income potential.
And Mike, you didn't create it. I didn't create it. Our audience didn't create it. But somehow the world's gotten in a big, big hurry, and money is drawn to something that expires the soonest.
Right.
We don't know why. And I'll bet you this. I'll bet you this is coming to Netflix. I'll
Yep.
bet you this is coming to I've just got some list of names. I bet it's coming to more companies. I bet it starts here first, and this will start spreading. But we don't know why the world got in a big ass hurry. It just, for some reason it did, and this blends into that economic concept that hopefully will be taught in schools sooner than later. It's called Prestonomics, and Prestonomics says, where the people go, the money will flow. And I didn't create it and you didn't, but the world is fascinated by where Robinhood is going to close next Friday,
Right.
and where Netflix is going to close next Friday, and where UPS is going to close next Friday. Why? I don't know, but we see the volume show up there. And when volume congregates where people go, the premiums get bigger. So now they're going to be more interested in Mondays Nvidia trading
Right.
and where Amazon's going to be trading by next Wednesday. Now, and that will mean higher premiums. It's more premiums being put in our pocket. And I don't know what to call the money press now, Mike, where we get 3 expirations a week, but we might. I'm kind of the name guy, so I'm gonna have to come up with a name. But these are like turbo money presses now
Yep.
on the Mag 7. I'm speechless, but in a good way.
Yeah, and it's a great thing. And if you're a busy professional and you're like, I've gotten in this groove of adjusting every Friday. You don't have to jump into trading these more frequently, but we have a lot of people that are retired or can carve out a little extra time. It just has that extra potential for more income. So we're excited about it. We'll, of course, be diving in, trading it, back testing it, studying it. And Preston, you like we've said, that SLV money press, you've already got several months of experience trading those Monday, Wednesday, Friday
Right.
expirations. Um, so yeah, we're excited about that news in a big way. So last thing I'll mention, just on looking at this week, we forgot to say Friday is also the PPI Producer Price Index.
Mm-hmm.
Um, the last year and a half, really 2 years, it's just been a lot of eyeballs on inflation numbers and the inflation gauge, and PPI is another one of those inflation numbers that the market keeps a pretty close eye on. So that's Friday before the market open. So Preston, we got a fun story from David to share, but anything else before we get to that? Any other stocks you've got your eye on, or anything you want to share about this week up
Well,
ahead?
one that's been jumping up and down and has mega volume on it so far today, and it's newer. It's in the toddler stage. I like to think of these newer stocks as being a 3 or 4 year old, that go around and say weird things sometimes, and then they're unpredictable, and then they're lovable, and they're getting used to be publicly traded, and then you have a whole idea whose time has come is AI. And so all that stage should be set that um, woke up to news of Nvidia investing $2 billion in through them for 5 new data centers. It's CoreWeave. The ticker symbol is CRWV. It's worth saying also, Mike, that I get extra curious the newer a company is, if the sooner they have weekly options.
Mm-hmm.
And CoreWeave, I think, had weeklies either the first week or two. That's just a telltale sign for me that there's enough interest that the market makers decide to put weekly options on a particular security. So I really like CRWV. The weeklies are anyway for multiple strategies, but it's got the volume and the price action to start the week off here. Anytime Nvidia's investing in you,
Mm-hmm.
it does not suck. Let's just put it that way.
Definitely. Yeah, that one's got some giddy up and going at it. Can cover a lot of ground in a short period. So yeah, it's a fun, volatile type of a stock where go take a peek at it. Understand it's kind of that bucking bronco type horse. It's not the the easy calm stroll. You got to be strapped in on that one.
Yeah, they
Yeah,
don't
of
make
course that brings
furniture, beauty
opportunity.
supplies. They're they're in the thick of the AI build out for sure.
Definitely. Well, good stuff. Well, let's share this story with David. A lot of these that we like to share, if you followed the FogCutter, we like to help motivate people, share some stories of, oh, look at how much money I've made. This one I was really excited to share because it's not always just about gains in results. Of course, that's why we trade. We want to turn a profit. We want to see an ROI. But one of our bigger frustrations, Preston, is we see people dive in, they start learning the world of options trading, and unfortunately, there's just a handful of people that give up, and they don't see it through. And there's so much opportunity. It can be so lucrative. So I love David's story. He said, I started my first money press with SMR. Needless to say, the weeks that follow were like walking into a fan on high speed. If it weren't for the Wow weekly webinars, so our Wow insiders get a jump on a Friday webinar with usually Preston sometimes another Trader's Edge mentor or trainer, to just help look at the market, help look at some current money press trades, just kind of help break down what we're doing, what we're seeing. So he said, if it wasn't for those webinars, I would have lost my entire investment. After backing away from trades for a time, I've eased back in. I don't plan to give up that easy. So, David, big shout out to you,
Yeah.
putting in the work. Enjoy the journey, right? There is that little learning curve. We're here to help you through it. We've got all the resources you need. Learn a little bit of that terminology, understand some of those option basics, and then you'll be cranking in no time, understanding these inside and out, placing trades close to placing trades with your eyes closed. And it's just a really profitable, fun journey that you're on. So big shout out for you for digging in and working through it. So
Absolutely. Shout out to David. Thanks for sending that to us, being vulnerable, letting us know how it is. And I love the attitude. I don't plan to give up that easily. I mean, it's that's what the attitude you got to have.
yeah, absolutely. And if you're curious about that Wow Insider, you can see some of Preston's trades as he's making them, as he's adjusting them. It's a great way to learn the money press, and you can actually get a free trial of that Wow Insider service. It's freeinsidertrial.com. You can go check that out if you'd like to see more. Give our Wow Insider a try. See Preston's trades. Follow those if you'd like. See how these trades unfold. See how we manage these, get a whole bunch of insights. There's training videos about the money press in our Wow Insider. And these Friday webinars, if you really have time on your hands, we've got like 10 years of webinars in there. You could just go back and literally spend countless hours studying, learning, reviewing. So lots of good info in that insider trial. Well, Preston, thanks as always. Appreciate your insights, getting the week kicked off on a strong note here for all of our listeners. And we'll be back next week for the first FogCutter in February. So we'll see if that January barometer plays out. And we'll have lots to talk about like usual.
For sure. Thanks so much, Mike, for doing this, and hope you guys are getting a lot out of the content we have on here on this weekly FogCutter. We love doing it, and we love your feedback. And this was a good one, Mike.
Yeah, definitely. Take care. Thanks so much. See everyone next week.